What's going on, guys? Welcome back to Sterlinx. Today's video is about top 10 facts that you should know about owning an LLC as a foreign owner or disregarded LLC in the USA. Number one on my list is what is a disregarded LLC. A disregarded LLC is something owned by somebody who does not live in the USA, who is not a USA taxpayer. Okay, now it is a foreign owner who could be a resident of somewhere else and who also owns the LLC in the USA. So that type of LLCs are cast as disregarded LLC. Disregarded LLC refers to a LLC owned by a single member, according to the IRS. Unless a single member LLC chooses otherwise, the IRS treats it as a sole proprietorship and does not tax the LLC. Instead, profits from the LLC flow through the owner's personal taxes. So, if a single member does not register a LLC, USA is going to tax you on a personal basis, where if you form a LLC in the USA while you are based abroad, foreign according to USA, then you would be taxed on the LLC accordingly. Okay, so that's what it means. So number two on my list is benefits of a disregarded LLC. Now there are lots of benefits on disregarded LLC, but if you focus on just top three benefits, that will explain you the reason for it. Okay, number one is limited liability. So limited liability is classed as if somebody was to sue your company, you're not a person liable for it, the actual LLC is liable for it. Yes, you have an obligation to maintain your LLC and you need to make sure that you take care of all the legal obligations, but however, the suing directly goes under the company, not in your personal property. That's what limited liability is. Okay, so second is no double taxation. So if you are based in a country where USA has got a treaty agreement, where most of the countries do have treaty agreements with the USA government, and that will classify you as a foreign tax owner, foreign taxpayer. In that case, you don't have to pay tax in the USA for your personal incomes from LLC, while you make some sort of profit or withdrawal from LLC. So you only pay tax in your own country, you don't pay tax in the USA. So this means you can avoid double taxation while you own an LLC in the USA while you don't live in the USA. Fewer record keeping duties for transactions between the LLC and another company. So the record keeping duties are bare minimal while it's a disregarded LLC, and you'll have to only maintain a certain standard, bare minimum standard. If you speak to one of the bookkeepers or one of us, we'll be able to absolutely clarify that for you. Number three on my list is disadvantages of owning a disregarded LLC. So out of the disadvantages, I have found loads, but however, I can definitely tell you about the top four that I think are very crucial for you, to understand and have a knowledge of. So number one is larger tax implications. Now all the LLC sounds as simple from everybody, makes it very sweet. However, LLC does have some responsibilities and some sort of liabilities that you need to meet on a regular basis, such as like quarterly basis and yearly basis. The tax cannot be done personally by yourself unless you are a certified CPA or understand fully how to do LLC taxations in the USA for the state that where you are registered. So tax implications can be quite complicated compared to where you are, and you need to speak to CPA or somebody who deals with that, such as like ourselves, to get you through the implications. Second on disadvantage is required payment of payroll taxes. Okay, so now if you do employ somebody in the USA who is a USA resident, although you are not in the USA, something like for example, somebody could own an LLC, which is a real estate LLC, and they have properties in there. They could have a cleaner, they could have property maintenance contract with someone, or they could have like a some sort of agency who actually work under the LLC directly, and you pay them from the company. And in that case, you will have payroll implications. It's not avoidable, and you'll have to maintain that, and it's going to be difficult if you don't know what you're doing. So that's why you need somebody like yourself to take care of it for you. Okay, third disadvantage is personal liability for company debts. Now yes, company is limited and you don't have to be liable for anybody suing you or company debts and such, but there are some tax and some debts that you need to bear in mind that you'll be liable for. So number one is, in my list would be something like government taxation debt. Now, it's not avoidable if your LLC does own some sort of tax to the USA. They will try their best to take it from the company. If not, they will enforce to take from the actual owner's personal property. Tax is not avoidable, so by all means you'll have to keep on top of it and be sure to have your filing on time and declare the right amounts on a regular basis as well to avoid any implications. Next on my disadvantage is increased chance of an audit by the IRS. So now IRS can actually audit you depending on if they have any doubts, or if they see something not matching properly, or if you have a large amount of transactions, or if you have a large amount of turnover through that company. So IRS is usually keen on making sure that the actual bookkeeping or the records are kept properly, and all the declaration they are doing or you're doing are actually done accurately according to their law of that state and the country. So it's not to purposely come and sue you, it's about making sure that you're paying the right tax and you are record keeping everything correctly. That's what it's for. Okay, so these are my disadvantages of owning a LLC, disregarded LLC in the USA. Number 4 on my list is what is considered as foreign-owned LLC. Foreign-owned LLC is an entity in which a foreign entity owns an interest, either directly or indirectly. This can be a single owner or a group of owners. The most common example of a foreign-owned LLC is a single-member LLC owned by a foreign investor. However, a group of owners can also form a foreign-owned LLC, commonly referred to as a multi-member LLC. So the LLC can be owned by either one or multiple people. It could be your spouse, it could be your family's friends, or it could be your business partners. So a foreign-owned LLC is classed as disregarded LLC. However, the purpose of this, number 4, is that you can own a multi-member as well as a single member. So don't think about do you have to own a single member LLC in the US? No, you can add as many members as you want, and that can be classed as a foreign-owned disregarded LLC as well. Number 5 on my list, guys, is foreign-owned LLC taxes. So foreign LLC taxes can be complicated, but I picked one of the top ones that will make much greater sense than the rest, or not commonly covered, but I'm going to cover it here. Any single member LLC, whether foreign owned or not, that has not elected to be treated as a corporation is automatically a disregarded entity. Disregarded entities exist legally, but they don't have to pay any income taxes of the actual owner unless the foreign-owned LLCs are generating income that are FDAP or effectively connected to US trade or business. Okay, just remember that. So you have to exclude those from there. Number 6 is a big topic of its own, but I tried to keep as simple as possible for you guys. So number 6 is how to file the right forms for a foreign-owned LLC. Okay, so here is the quick run through it. All foreign-owned single-member LLCs are required to get an employer identification number, which is the EIN or federal tax number, depending on the state. Next is file form 5472 if there have been any say reportable transactions during the previous tax year, and file pro forma form 1120. Maintain books and records to support the claims you make on form 5472. Okay, so now here is a quite important thing or note to remember. The IRS treats each foreign-owned disregarded LLC as a separate entity, guys. Okay, separate entity. That means that if one foreign person owns more than one LLC, they must report each LLC separately, and if they don't, each LLC is fined separately as well. So remember that one. On number 7, I decided to cover the potential risk. It's also important for you to know the potential risk of having a foreign-owned disregarded LLC. So number 7, potential risk associated with a US LLC for non-resident foreigners. Okay, so in here the risks are so many. However, I put the top 3 that are mostly commonly seen or thought through. Okay, first one is taxes. Foreign investors may be subject to income tax on foreign earnings from a US LLC, even though they are disregarded LLC. Depending on type of that trade that you do using the LLC, you might be liable for tax. Second one is a foreign investor may not have equal access to the US LLC's assets and financial information. So things like, if you own some sort of properties and, you don't regularly visit there, or you don't have a visa or permit to visit there, this could be complicated and you might not have access to some sort of, legal documents or anything like this, or legal rights. So be very careful about what you want to do there, and have a think through, speak to qualified people, and as well as, lawyers or somebody like ourselves, and basically have a thought through about what stages you want to do and what steps you want to take while you want to go in the USA for your business. All right. Foreign investors may not be able to take an equal part in the management of the business, which may result in parties asking the question, can LLC members sue each other? So this can be a question if you have members, for example, in the USA, as well as you are a member of the same company, but somewhere else, and you don't have enough credibility of going to joining the board meeting and things, as well as traveling there on a regular basis. The business needs it, so all the other members can raise the question, is it worth having him on board? So that's a massive risk factor. All right, so that was my number 7. Number 8 is how to open a non-US resident LLC. Now, you guys do look for quite a few different people online, but Sterlinx does that at a very affordable cost, and we go through all the legal processes needed and everything needed in order to set up an LLC. We'll also advise you what is most tax efficient, which state you should go to, and what's required for you to maintain the business. Going forward, if you need accounting, bookkeeping, we also advise you on that as well. So it's good if you speak to us rather than going through somebody online randomly who you don't know. All right. Okay, so how to open a non-resident LLC. So number 1, I would suggest is choose the state in which you will be establishing your foreign-owned LLC. Number 2 is establish your business name or identity. Number 3, obtain a physical US mailing address. Number 4, apply for an EIN. Number 5, consider hiring a registered agent, which is very important. Now, this is different to the actual mailing address. Number 6, file your LLC with your choosing state. And number 7, create a LLC operating agreement. Number 8, open a US bank account. Luckily, Sterlinx does all that in a nice bundle package. You can see the link below to go on our website and look for our services, US services, and US company information page for that. Okay, so now that number 8 is covered about how to open a non-resident LLC, now we'll move to number 9. Number 9 is responsibilities regarding foreign-owned LLC. There are a lot of responsibilities you get when you open a LLC in the USA. So here is a quick overview of what you should be careful of, because this video is a short and sweet one. Every other topic will have a longer version in future, but for now it's important that you gather this information what I'm giving you on a quick basis. All right. So since a foreign-owned single-member LLC is taxed as a corporation, it must file a Form 1120. Which is US corporation income tax return with the IRS, and a state corporation income tax return. In addition, you may be required to file a Form 1120-S with the IRS if your LLC has income from operations in a state that requires a sales tax. Okay, so that's a different one. 1120-S is a completely different to the 1120. All right. And you will also need to file a 5472 no matter what, which is a foreign corporation income tax return with the IRS if you qualify. So here comes number 10. When are the foreign LLC taxes not applicable? Now, we need to understand foreign LLC taxes are not applicable when the following situations apply. The foreign LLC is a member of an affiliated group that includes at least one US LLC. Right? So here that again, the foreign LLC is a member of an affiliated group that includes at least one US LLC. The other reason is the foreign LLC is a US branch of a foreign corporation. Next reason is the foreign LLC is a US partnership that is a member of an affiliated group that includes at least one US LLC. And the other reason that could combine or slash whichever you want to think about is the foreign LLC is a US branch or a US partnership of a foreign corporation or partnership. Now, these matters can be a bit complex. I do highly suggest you speak to one of us or speak to a qualified CPA in the USA. And if you don't find somebody in the UK, you can always call us. Sterlinx, specializes in these services for e-commerce sellers. So yeah, I mean, these are my 10 reasons, and I'd like to congratulate you on finishing off the video. And and I would like to take the opportunity to thank you as well for taking this massive step towards the scalability of your business. So thanks very much. Please subscribe, and we will see you on the next one. Thanks a lot. Bye bye now. Have a good day ahead.